All right, so let's get going. Welcome one, welcome all to today's Forex trading strategy session. It is a Tuesday, May 19th, 2015. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We've got a lot to talk about, so let's just get going, huh? Remember, trading and investing is risky, not appropriate for everyone. Your past performance does not predict future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. All right, so let's talk fundamentals, let's talk technicals. All right, we talked about sort of a problem that the ECB was in. They had spent billions of euro to weaken the euro to create inflation. And I mean, this was a conversation probably three trading days ago, right? What was the problem with that? Draghi spent billions of euro to increase asset prices and to, well, which is another way of inflation. Well, so what's the problem? Euro was strong. And DAX was coming down, had been down for 2 months. So we created a trade plan specifically staring at this level here on the German DAX, which is the German stock market. And our analysis of these asset prices suggested that it had to go up. We were a world of hurt. And that I suggested you should watch the DAX very closely. How many people agree to that statement, that we had discussed this very clearly, very logically, very intelligently, and that we may have not have even discussed the DAX in months? Yep. And now here's the question: did you watch the DAX? Because Buzz says yes, YJ says yes, Demeter says yes, Daniel says yes, Wyatt says yes, Ken says yes, all that kind of stuff. Okay, you guys were watching it, cool. Because we wanted to see, first of all, asset prices going up, and second of all, we had looked at the history of correlation, right? And our review of the correlation was that when the DAX was going up, the euro was going down, and then when the DAX was going down, the euro was going up. So we wanted the DAX to go up because that would actually suggest, you know, the quantitative easing was doing its job, and that the correlation might continue where if the DAX went up, the euro would go down. How many people are following me? That we actually discussed it for like a half an hour. The history, the correlation, right? And that just might continue, and if it did, and this particular area, the 3A2, and if it went up, and then maybe the euro would come down, all that. Okay, good. So Ron says yes, Jim says yes, everybody else, right? Okay, and Sebastian says yes. Okay, so let's go to the next part of the equation. What was the guess fundamentally that needed to happen? Fundamentally, that's technical. That's the intermarket correlation. Those are reversal areas at fib retracements and all that kind of stuff. Fundamentally, what was our guess that needed to happen? There was no way to know. Draghi had to say something. He had to say something. Verbal intervention, you guys got it. Perfect, right? A Draghi comment, verbal intervention is what Jim said. Ken says ECB, talk more about pumping. Yeah, something, right? We didn't know what. I didn't know, I think I said, I don't know if it's going to be in 6 days or 6 months, but he had to say something, right? Yeah, more QE, blah, 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 blah. Right? Yeah, I said be giving a speech at a conference of finance professionals or something, right? Like literally had no idea, but somebody had to say something at the ECB to spur this, right? And that occurred today. Holy smokes. Do we get like every single one of these ducks lined up? So what they said is they're just going to do some extra quantitative easing, and they're going to do it for the summer. Because you know a European is incapable of working in August. We know that to be a fact. It's in the DNA. So it's got to happen soon, because they ain't going to do it over the summer, because nobody's going to be in the office. I don't care. I don't care if the entire global economy goes into recession. No one's going to show up at the ECB to do anything. So they have to do it now. And plus, they're already, choking on their own blood, because it doesn't feel good to spend, tens of billions of dollars and get, or euros in this case, and get exactly the opposite effect that you were hoping for, right? So it had to happen. It was a guess. There was no way to know, but it actually happened within 54 hours of me saying it. Cool. I ain't bad. So anyways, congratulations. Because the euro dropped, what, 300 pips? Huh. Well, you know about that yet. So we'll from 115 here to 112, right? Cool. It was a good guess. Yeah, sometimes I get them. Okay? Very nice. All right. So that's that. Good. Gloating's over. But more importantly, it was the logic, and I hope you took some of the logic away. Because some of these things, if you paid attention, just sort of had to happen, and that's why they became guesses. So the next part was getting a lower low, lower high scenario, right? How many people remember that part of the technical analysis? To have it clearly break support, pull back, retest it as resistance, and down. How many people remember the idea of like hammock? That kind of thing. It just, when you get a break, right? If there's been an uptrend, so it's almost exactly the same as this plan over here, except that plan over there failed. Remember, that was the retail sales. What other piece did I not? There's one other piece that I haven't discussed today that was part of our analysis, actually, that sort of helped this at least a little bit. It's another fundamental element. It was another reason to be looking for a reversal pattern at resistance. Bond yields, yeah. I'm thinking more of commitment to traders report. Right, because we had talked about, even though the Euro USD had gone up 1,000 pips, guys, 1,000 pips, there was no bulls in the market. According to the commitment of traders report, there was no increase in long positions. None. Holy smokes, it moved 1,000 pips. The Euro USD appreciated 1,000 pips. And we knew from our fundamental analysis of large speculative positions that no one was long. No new people were long. No new long positions by hedge funds. It was just simply traders getting out of their euro shorts. So we were ready to pounce back in on this idea that under current market conditions, if those bears got back into their short positions, the Euro USD could come down pretty quick. So anyways, I just want to make sure all of that is there. Now it's yours to use, guys. The information's now in your brain. Do whatever you want with it. Most likely you're going to ignore it and forget about it. But maybe not. So anyways, what do you do when you get a new lower low? Wait for the retracement. Okay, we've talked about that quite a bit lately, right? I think I've drilled that one as well. Let me get this because this didn't work. Remember, this was part of the head and shoulders pattern that got killed by the surprise in retail sales. All right, so now you need to decide what your next move is, and I would assume, let's say, down to some level of support, and then we'll probably need to fib this whole thing if you're a bear. And if you're not quite a bear, then I would assume as a bull that we're in a new range, I guess is how I'd look at it. I mean, if I was a bull, I would look at it like this would possibly go into a range from these zones. Okay? And if you're a bear, there's no support, right? In your opinion, and you're going to look for something like that. Okay? Four-hour, would you play it like a head and shoulders? You know what, here, let me clean some of this up for you. That's probably not it. You've been too gone for too long. Road, don't you know? You've been too gone for too long. Euro, why don't you just stay gone? All right. Just want to check something out. All right, so the question was, am I treating this like a head and shoulders on the 4 hour? So for that, I'm going to have to zoom in quite a bit. And, you know, the thing with crown patterns and head and shoulders patterns and stuff, to me, they're just the same as any sort of price action move. If you get a low lower than this low, then I'm simply a bear. And then you would wait for a retracement. In this case, if you're going to play it like a head and shoulders, then you're going to take it off of the weekly central, which is off of that. So that makes it a 618 retracement. 618 produces a 1382. And we could all be talking about the head and shoulders pattern and, you know, whatever. It's already happened. But yeah. Justinus, A2 would be aggressive sell. Well, it's not me, it's you. I'm just reading the charts, man. I don't think about nothing. You know, if you're going to play it like a head and shoulders, then you got to play the neck, the right shoulder. So therefore, it's going to make a 618, okay? Not a 382. Also, what happens if you hit your weekly target in the first 54 hours? How many people know this rule? If you hit the weekly target in the first 54 hours of the trading week, what's the rule for weekly pivot points? Goes back to the central pivot point, which happens to be a 618 Fibonacci retracement and the right shoulder of this head and shoulders pattern. What? Oh, snap! That just happened. Yeah. So, I mean, it's all the same. But yeah, it's true. It tends to go back to weekly central. I also said, if you're a bull, you're going to play it like a range. Okay. So, I mean, there's a lot going on here, man. Okay. All right. So are we done? Have a nice day. Yeah. So did anybody catch the move? It moved 300 pips in the last 24 hours. Did anybody get a big chunk of it? And they're smiling ear to ear. Mark, yup. Sebastian, yup. Aaron, yup. YJ, yup. Edwin, yep. Buzz, yep. Oh, congratulations. Yeah, Marina on the pound. Yep. Well, cool. Yeah, let's look at the pound because the pig was beautiful, huh? You've been too gone for too long. All right. Boom, 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 boom. Let's see. Let me get rid of this. Well, no, I'll leave it there. All right, I'll leave it. So I haven't touched this chart at all. And as you can see, we have this set up here to fall down to this area. Guessed it would make, I don't know if you can see this, then we guessed, or our analysis suggested, which is better than a guess, that we'd have a big retracement. Holy smokes. It was a very big retracement. Okay, so let me put our analysis work here. And you can see I have this coming down to here. So I'm gonna move it like this. I think that is the time. Remember, none of this even exists on that part of the chart yet. Cool, huh? Because this was the target, right? You see the target? So that's not bad. I wanted to kick off this. It actually double topped, but resistance is resistance, right? Can't always be right. But it's reasonable, isn't it? Okay, I got to go to a higher time frame to squeeze some of this analysis in. But look what we used as our resistance. It's not so surprising now, right? You see the top of the channel? So you can actually see that I've taken it even further on this higher time frame, that we're asking it to come back down to the monthly central pivot point and then continue up. So we've already had the up move planned before it was going up, and then we planned on it coming down while it was still trying to go up and then having it go up. So we're planning it like a month in advance. Let me kind of get there. Okay, can you see? How many people are putting all these time frames together now? I mean, we did talk about this, right? If it's not true, let me know. I believe we have this rising about 500 or 600 pips, I don't know, and then down 300 or 400 pips, and then up 1,000 pips. Right? Crazy, huh? What I'm trying to get across, guys, is that the work will set you free. Right? Do you remember me telling you about that? That used to be my mantra, except then I found out that's what the sign said at the gates of Auschwitz. And I thought, well, that just ruined a good quote. Yeah, Mark, all of this is lucky, right? So the luck here is the UK had negative inflation. Okay. So anyways, I want to make my point here. We do have this planned. Lots of things do have to come together, but I find over the years it's interesting how the things tend to come together, technically and fundamentally. Just sort of magical, okay? But I hope you're starting to gather that you can plan a week or two or even a month ahead, paying attention to the higher time frames. So let me remind the future that I've already explained will happen, and of course, since I've already explained it, the past. Let me go back to the past when we were sort of in here and tell you then about the future, which hasn't happened yet. Okay? The British pound will be strong because of what Carney said. So this goes all the way back to here, which we predicted this reversal when we were coming down. How many people are following me here? Then we had an inverse head and shoulders pattern, which we had watched a week or two in advance. Then the idea was it was going to come up, and then it was going to come down and then come up, and we had to line up a bunch of guesses. Okay, everybody following me here on this one? We talked about that area when we were coming down. Okay. This had to do with Carney saying, hi, I'm Canadian, I'm conservative, and I'm going to say something outrageous. This is what Carney. I mean, you have to kind of read through it. Carney, if you look at his history, is a conservative central banker. This is why the Bank of England hired him. Now, who's more conservative than the Bank of England, for crying out loud? It's been a bank since 1682, I think it is. So anyways, right? Very English, right? So anyways, the Bank of England hires this Canadian because he's outrageously conservative. Great. Carney says, the numbers in the UK are horrible. Inflation is incredibly low. Don't worry about it. So we just got numbers today that says for the first time in like 1,000 years, inflation is negative in the UK. Very, very bad. But we already knew that. Right? Beep, beep. Up aboard the clue train. Hello. I mean, come on. That's, that was so 3 months ago. So the thing is, what's the future? Not negative inflation. So you have to ask yourself, do you think the UK is going to go to like, do you think the UK is going to go to minus 2% inflation? Okay? Do you think the UK is going to go to -1 per inflation? Do you think that we're basically at zero inflation because of that crash in oil prices when oil was $42 a barrel? And we were talking about how that would kill and crush inflation numbers because that impacts inflation greatly? Yeah, okay. Is oil still $42 a barrel? No, but it impacts other things, Ken. It's hard to cut out core because it doesn't affect everything. Like, okay, let's say you take out energy, but you leave food prices. But does food have to be delivered from the farms using a vehicle that uses oil? I mean, I don't know. It's whatever. So let's not get into it. Let's just look at it from a 40,000-foot view, right? So no, oil's back to 65. Everything's normal. The big crash is over. Whatever. So one way you could look at it is, okay, things are bad, but it's backward looking. Things are not that bad anymore. So in the future, let's say August, September, the numbers are going to be positive again, and the world will be so surprised. Oh, look at the UK. It's doing so well. And we're long and gone. Getting the pippin on, right? But we already talked about this in the past. It's just becoming present, but we're already trading the future. Oy vey, so complicated, right? But that's what I tell people when they say, so what do you do? And I'm like, oh, I'm a foreign currency trader. And they're like, oh, I don't even know what that means. I said, oh, it's not that complicated. You just have to know everything and then accurately predict the future every single day. I said, besides all that, it's pretty straightforward. Right? What's the big deal? So we talked about that in here for reasons to look for a head and shoulder reversal pattern. So we got head and shoulders here. Then we got the higher high hammock, higher low, which predicted it up here, which we got. Then we had to measure that from there to there, which we got here, which produced an up here, which by then I already created a channel, which suggested then we need to make a fib of that move to catch the breath, which happened to be the monthly central pivot point, in which at some point we'll probably continue to the channel and make a higher high. And a lot of this had to do with Carney getting us on the clue train, because if Carney says the pound's going up eventually, then I'm going to believe him because he's very conservative and he's Canadian, eh? So that, let's say by the end of the year, we're going to be up here and everyone's going to be surprised. Huh, whatever. Amateurs. What an amateur trade. Right? So, all right, a lot going on, I admit it. But, so what? What's your next move, right? One thing to watch very closely is the daily 21. Okay? Because it doesn't have to come down to the monthly central, my friend. Okay? So I'd sort of start getting ready. I'd pay attention now if I were me. You know the law. Okay? I'm just going to put that there as sort of a reminder. And we'll just play it like it's a channel, yo. I don't want it to come all the way down here, that kind of thing. So, you know, I'd like it to kick off of the monthly central, and, you know, you can further your analysis like this if you want, you know, free country. But, you know, wouldn't it be nice if it just kicked off the 21, right? Yeah, see you in December. Yeah, cool. Well, so we're going to need some help. So So we're going to need Carney in August and September and October to start loading the boat for next year's rate hike. So write that down. In September, the meeting minutes, the MPC is going to somehow, some way, suggest to the world that next year they'll need to raise interest rates. Boom! We'll already be long. You writing that one down? This surprise will shock the world in September. Yeah, good. Capital letters. Okay, good. Run on. Excuse me. So, do you try to catch this falling knife right now? That's something you're going to have to decide, right? Trying to get this so it looks pretty on all time frames. It's not doing it. So I think we need to worry about this a little bit as well, and we're right. Someone's going to fib this, right? Don't you think someone would? We're about a 50% retracement in there, so we'll leave it at that. Okay, so that's the pound. Nice move. Cool. How about some kitty cat? You know the Lord. Okay, so a few days ago, our plan was to have it go from the gray zone up into the red zone. Huh. That's cool. Right? It's only 300 pips, but it's something. And now the interesting question to ask is it going to come back down? Well, all we know is we're in a range, so you should at least start to consider taking profit, and that you can't plan on it breaking the range. Because if you thought it was going to break, then it's not a range. Okay, so what we talked about back here is we went from trending down to range traders, right? Remember all the discussions I had about using the right tools based on your analysis of market conditions, and when market conditions change, you change your tools. But the first thing you need to ask is what? What's the first thing you ask yourself when you open up a chart? It's not support and resistance. That's second. Are we trending or is it sideways? Thank you. Okay, so we're playing this. Remember, because I'll guarantee you were nervous in here. And that predicting it going up felt ridiculous. I know it to be true because it always is that way. It is always such. Okay? And that you have to plan. You have. You don't have to be in it, but you have to plan for that. It's our job. Yep, Mark's happy with the small profit of 300 pips. But if this happens, what do? Buy it. See, where we are now, right this second, you're getting out of your long position for profit, and you're thinking you might even sell this sucker and head back down to the bottom of the range. Like it did here, like it did here, etc., etc. Okay? And you will continue to do the cycle of buy low, sell high, buy low, sell high, until the range breaks. How many people are starting to see the string of pearls? That it might have taken 5 or 6 or 7 or 8 or 9 days worth of analysis, but because we're meeting every day, you're starting to see all the chambers click and line up. Is anybody getting that feeling? Where it's not just 1 day's worth of analysis, but it's multiple days where you're starting to see. In this chart, I've killed all the moving averages. This is just price action. And you're seeing how I go from, all right, we're trending, it made a lower low, let's sell the green candles. To suddenly, no lower low, now we're trading the range. All right? Only 4 or 5 people out of 60. So 92% of the people don't get it. I hope it's helping. Yeah, all right. Yeah, Edwin. Yeah, that's funny. Yeah, nodding with agreement. Yeah, yeah. Well, see, that's funny, right, though, Don? The reason I from time to time force you guys to answer or beg you guys to answer is that it's important when it comes to neuro-linguistic programming. We're actually trying to reprogram parts of your brain, and I need certain things to manifest, right? I need you to not just nod, but I need you to use 3 or 4 different parts of your brain, because each part of those parts of your brain are going to store the information. And when you're trading on your own, I don't know what part of your brain is going to, fire up the cognitive storage facilities, right? And provide you with the knowledge that you need so that you say, oh, is the market trending or is it range bound? Oh, it's range bound. I should be buying at the bottom and selling at the top. What's my oscillator doing? See, for some people, it's a visual image. For some people, they hear my voice. For some people, it's something else. Very often, I'll do things to quite frankly, to piss you off or to insult you. And I don't do it because I'm mean or a bad person. I'm saying it to invoke emotion, and that emotion will conjure up parts of your brain where you can store. I mean, just think about, the time your mommy yelled at you and made you cry, right? Or the time that your 3rd grade teacher made you walk in front of the class and you peed your pants, right? And all of a sudden now you hate public speaking. I mean, emotions are just as real as, the physical world around you. Right? So all of these things are important. So when I'm saying things like, is it helpful? You can nod your head, but if you lean forward and you're typing, now you're using the physical world and the motor skills of your arms, which are different parts of your brain. And also now you're admitting it publicly, and also you're admitting it to yourself when you think, yes, Yes, me. I do think that these sessions are helping me every day. I do feel like I'm becoming a better trader, and that I do feel that it's possible to be a successful Forex trader. To get you to even think it is important. Do you understand? So you can nod your head, but if I could get you to stand on your chair like Dead Poets Society and say it out loud, you're going to believe it even more. Okay? Because I can't do it for you, so you need to do these things. Okay? And I think they're important. Neuro-linguistic programming is very important. We can actually physically, not just spiritually, it's not positive affirmation, but we can actually physically change the synapses, all these connections that we can actually physically change them. But you have to do that work, right? You have to do these things. I can only try to lead you. So anyways, when I ask you a question, you can nod, but then you get in these situations when you're trading by yourself and you're like, I don't know what to do. But when we're together, you say, totally makes sense, totally makes sense. Yep, makes sense. I totally agree with that. Yep, makes sense, makes sense, makes sense. Then I say goodbye, you're all alone with your chart, and you have no idea what's going on anymore. And you're like, well, it looks bullish and bearish. So we have to change that. Okay. Now, someone brought up a Forex tester. All right, so I got to give you a shameless plug here, because I used to use Forex tester 1,000 years ago. It was something that we did with my other organization, FX Bootcamp. I don't generally mix things up here like that, but there is an important point. Forex tester was something that I helped people with, and it was a software program that would, it's actually designed to backtest strategies, but you could tweak it so that you could use it to build muscle memory and to practice trading. The problem is it was very, very cumbersome to set up. It was very difficult to set up, so it did the job, and it did a good job. It was just complicated. Okay, so let me show you something, and I generally do this, so bear with me. This is FX Bootcamp, something I found a long time ago. If you go to the homepage, fxbootcamp.com, go down to Forex Trader Tools. There's a newer system that plugs directly into your MT4. And what it does is it pulls up old data, real candlestick data, and you trade your MT4. And you can use all your different charts with all your different time frames, and it's right on your MT4 with your chart setups. And it allows you to trade, and it creates the history, it tracks your success, and allows you to use your normal ops and your normal EAs. And what it does is every candlestick, let's say a 1 hour candlestick, you can play it back, and it's real data, so you can go back to like 6 years ago and you don't even know what date it is. And every 1 second it's playing 1 hour. So you can go back and retrade the price action and do things like practice, and you get a year's worth of experience a day. And what happens, and it's addictive, where you can just end up just practice trading in a fast market for hours. It's very, very addictive. But it'll actually, so what it'll do is when you place an order, it'll stop your chart, and you place the order like that you want, and then it resumes. And you can speed up and slow down the candlesticks, so they might each be 1 hour candlesticks, or you have 5 charts open, you got the 1 minute, the 5 minute, the 15 minute, the 1 hour, the 4 hour. They're all moving in real time just like you normally would, and you're buying and selling, and it's tracking all your statistics, and it's unbelievably fabulous. And it's very easy to set up compared to Forex Tester. So To me, it's a leap forward beyond Forex Tester. So you guys brought that up. Yeah, this is, it's like $100 or something. But I'm telling you, if you want to get used to trading price action and practice that and get a year's worth of experience in a week, it's a hardcore muscle memory tool. Yeah, like incredibly helpful. I'm not going to say any more about that. Okay, but that's that. Yeah, no, it's, yeah, ask anybody that has it. It'll knock your socks off. You'll say, oh my God. So, all right, so that's that. All right, moveon.com. What should we look at here? What do you want to do next? Are you still buying USD yen on pullbacks? Keeps coming back to 19. Next target, I'm going to map this out, is going to be up here pretty much 120.50. Yesterday afternoon, I'm thinking maybe, just maybe, at 120 to look for a sell. And then I backed off fairly quickly off of that and said, you know, I think I'll wait for 120.50. And you know, as you can see, pretty glad I did. It seemed to me that the resistance was higher, and maybe even 121 way up in here. But at some point, we're going to get a breakout, and we'll be bullish, and hopefully it's sooner than later. Eric, no, the Head and Shoulders last week was dead last week. No, that, you know, once it's broken, it's dead, man. And it was a good setup. New information came out, right? And prices readjusted. And that was the retail sales. No, it's totally dead. You can't replay it. If you have a dollar index, you might notice we're on the weekly R1 right now. So this might be a good time to take a break on your dollar buying. I don't know if you got that. I got it on a different computer. That's what happens when you have 18 screens, I suppose. So pound dollar's down. We spent a lot of time looking at the yens, was it yesterday? Let's do a follow-up view of that. Wyatt has 3 sports cars from back testing. Nice. It's good to have experience, huh? Yes, Sebastian asked if I trade Noki, which correlates very well with Brent. Yes, it does. I typically don't. I just have enough to look at already. But you're absolutely right. Right. Norway trades very well. To me, it's just another commodity currency. Okay. So let's see. How does my Kiwi yen look? Does it? We drew the little triangle. Remember, we hadn't made it to the bottom yet. So I drew the triangle. Then I drew the channel, which hadn't existed yet because we didn't make a bottom. The price was still sort of, I think, up in here, right? So we guessed. I asked if anyone did Gartley's and blah, 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 blah. But it kind of looks not far off, right? And the idea is maybe we head up into this point. Okay? And what does that suggest to you with this big spike off of support? Now remember, this hasn't been a great trade for a while, right? You might have given up on it. Well, I'm wondering if it's risk on. Okay? So some more QE, some more assets prices going on. But see, here's the thing. What does QE eventually do? Eventually fixes Europe, which eventually fixes, okay, so fixes Europe, fixes then China, which then fixes Aussie. And by that point, once all of that happens, the U.S. will just be unbelievably ripper high and will be normalizing interest rates. And the yen will be weak. And wow. Game on, right? Carry trading, so on and so forth. And so maybe the canary on this one is going to be Kiwi. Right. Well, just right. Everything comes back to normal. But you know, I'm not joking. We talked about this, you know, that scenario 18 months ago. So what was one of the key factors that was killing the European Union economically, let's say 2 years ago? What was one of the major things that was crushing the European Union? Overvalued euro. Why was the euro overvalued? Because hedge funds were buying European bonds to capture 12% and 20% bonds. Now, why would they do that? Well, Spain and Greece and Italy, right? But why would they do that? Because there was a time when the hedge funds would not do it. That's why interest rates went to 20%. So why did interest rates go to 20%, and then suddenly why did people start investing? Because Draghi said he would do whatever it takes to save the euro. Because he needed them to buy those bonds because the ECB didn't have enough money to do it. So they needed an implied guarantee, and all that money then went to Europe to save the peripheral countries, otherwise known as the pigs, and that crushed interest rates, went from 20% down to 2%, no joke, but it also made the euro overvalued. So they waited just long enough so that when those bonds matured, they had to roll over, but now the interest rates were 2%, not 20%, by design of the ECB. And so all the ECB had to do now was flush those investors out of the euro, because when they bought those bonds, that they had to buy them with euros, and now the euro was overvalued, creating deflation. So right around the time when, you know, when these bonds started to roll over, that's when Draghi had to come in and you know, get the powers and authority for quantitative easing, which then forces people out of those bonds and out of the euro and somewhere else, like the US stock market. And we were talking about how that in conjunction with what was going on with at the Fed, now that we've tapered, that Euro USD comes down, but then now the quantitative easing saves the euro, and by devaluing the euro even more, and at some point that free money will stimulate the economy. And that economy there is generally the same size as the United States. So when that economy comes back on board, they'll be doing more business with China. And when China comes back on, they'll buy more commodities from commodity countries. And then everybody's fat and rich again. And at that point, the Fed certainly will be normalizing interest rates. Which means that everybody's doing well, and the dollar is even stronger. Okay? So that's what I was saying 2 years ago. It's happening now, but we're also, you always need to be a couple of years ahead as well. But isn't it an interesting history, interesting story? Yeah, Louis, like, I'm guessing, like, so what you've heard from me in the past is that the time from when quantitative easing starts to the time when it hits the average yuan takes about a year. Is the guess. And then that has to translate to saving China, which is another year, because now it's got to trickle through their economy and so on and so forth. Okay? So anyways, if New Zealand avoids the situation of having to cut interest rates, then this will be one of the canaries of the the beginning of a carry trade, right? That's why we watch it, right? So it'd be interesting if suddenly a channel presents itself. Okay, you notice how it happened at the 50% Fibonacci retracement of the last move. Of that. So we'll see. It's not easy street yet, but we'll keep an eye on it. Huh? So that would be the first one to go north. Yeah, we thought these yens might get a little strong. I don't want them to, but right now the U.S. dollar is just looking nice. But remember, I'm thinking it's topping out right this. We're right on a weekly R1 for the dollar index. So. Baltic Dry Index, 620.
Now from the house starts and building permits data, housing starts expected at just over 1.01 million. That'll get from the 926,000 in March. Building permits expected at 1.06 million versus the 1.03 in March. That'll be up about 2.1% month over month. Housing starts would be up about 9.6% month over month at just over 1.01 million. Also, we expect to see revisions to some of the prior housing starts data at 8:30 Eastern Time.
So there you go, Mark.
And we're about 20 seconds now from the housing starts and building permits figures.
Brought to you by TradeTheNews.com.
10 seconds. Starts 1.1135 million above the 1.01 expected, and permits at 1.143 billion above the 1.064. Starts revised higher to 944,000, and we had a slight revision lower in the permits to 1.038 from 1.039. But again, a beat of 1.135 million versus the 1.01 expected, and 1.14 in the permits versus the 1.06 expected.
Housing starts the best, the highest level since November 2007. The dollar.
And we're seeing the dollar index move higher once again. The euro making a fresh low, 111.50.
Now we're on the daily 21 for the dollar index, but it's going up. Did anyone catch the retest of 120, or sorry, 112? Good job, Marina. Yeah, for any sort of price action trader, it's a pretty straightforward trade.
The euro 111.50 being approached. The dollar now firmer by almost 1.5%. British pound 154.70. Stronger dollar post data.
All right. I'd say the Aussie dollar is the best one, huh? It's just moving perfectly. We're now at 79.5. A beautiful sell opportunity today at 80. Beautiful. USD yen not far from 2050. Right on, Marina. Well, you've been around a while now, hasn't it, Marina? It's amazing how like years go by. You know, it's been a couple of years now, hasn't it? Hasn't it? It's only 2 months. Amazing. 2 years. That's so funny. Yeah, I'm that.
Yesterday's close ahead of the open of FIT trading, we were below 2.2%, so we've seen about a 6 basis point move in the last 30 minutes or so through the housing starts and building permits data. The 2-10-year spread now wider by about 0.3 of a basis point, up to 166.
So I'm going to go back to this being set up on the commitment to traders report, guys. We talked about it week after week after week after week, that nobody's long, and that this should likely continue back down. I don't know where, and I don't know when, but I know we were simply looking for reversal patterns at resistance. Could have been 115, could have been 120. Don't really know. But if it does continue, I think we can go all the way to 80. I hear about parity. So, you know, hopefully, like I've always said, when the fish are jumping into the canoe, go fishing and bring an extra canoe. Any last questions? Oh, well, you know, what I'm suggesting is when I'm trending, if this comes up, you're getting green candles, right? And then I look to sell. So I'm selling at resistance, but on pullbacks. That's all it is. To me, RPP, I'm not quoting anybody else. All I'm suggesting is I have no idea where it could fall, but I don't give two hoots about parity. It can fall as far as it wants to fall. And Goldman Sachs isn't in charge of that either. It's going to fall until people stop selling it, right? So my thought is that a lot of the trade hasn't even begun yet. As you can see, a lot of this was guesswork, and that traders had been guessing wrong. When the Fed does start to normalize, that should bring the Euro USD down some more. And I believe, and I've already told everybody, but I'll tell you again, I will be a bear on the Euro until they discuss tapering the quantitative easing, or ending quantitative easing, the beginning of the end of quantitative easing in Europe. At that point, I will be a Euro bull. Okay? You know, I don't think so, Lewis, no. Okay. So, yeah, so who knows, right? So we could be at 80 when that happens, but I don't care what price is. I care about the fundamentals. Right? So to me, it's a fundamental play. When the fundamentals change, I will change my strategy. Okay, I'm just got my eyes. I'm looking at a million charts. Okay, any last questions? Any more? I'm here for it. Got my eyes on like 100 screens, but besides that, you have my full attention. Yeah, a lot of, MPC, FOMC. JP Morgan raised their British pound forecast from 43 to 55. I love it. Thought on oil? Let's see if I can figure out my thoughts on oil. Yeah, I love scalping the news, man. You guys just have to ask. I love scalping the news. There's my plan for oil that I set up in December. I know it's almost June, but that was the plan from December. Sell oil here. And then in April we had it, we were still in here, I think. Down, up, 1, 2, 3, down. But we got pretty close here to the touch. I mean, it hasn't been perfect yet, but I think you understand where I'm at. And it looks like it just maybe wants to start heading down, right? Doesn't it look like it just might break the 21 this time? Like it does maybe one of these. And then it'll probably do that, and then it'll probably do that. Maybe. But the analysis should, say everything. I think we can get rid of this one. We don't need that anymore. You could even see the divergence. So, a lot going on here. So, bacon scalper, you like scalping? Yep. I in particular, I've grown quite fond of scalping with binaries. It's just I don't have to mess with stops and limits and stuff like that. And I found that most often when scalping with spot trading, that because you don't know exactly when to get out, that you tend to give a reasonable amount back waiting on a retracement, and then you're like, you know what, it's retracing too much, I think I'll get out and take my profit. Where the interesting thing about scalping with a binary is it's the opposite. Sometimes I only have 6 pips profit, but I'll get paid 25 pips. They're like, whoa, yay, y'all. Hallelujah. Because you get paid for the full kit and caboodle, right? So sometimes it doesn't quite go as much as I want it to, or it goes and it comes back. I don't have to worry. I don't care if it goes, 25 pips and then comes back 19. I'm still going to get paid for 25. I love it. So it's pretty cool with scalping and right, all that kind of stuff. So, but other than that, I've been scalping news for 10 years, more than 10. So, sure, Demeter. Yeah, I prefer, scalping 1 minute and 5 minute charts. I used to scalp a lot on 3 minute charts. But I use a high volatility play on the news scalp. So, you know, so I look for breakouts and pullbacks. You know, so you got two ways of doing it, right? Let's say news spikes the news up like this. I'll fib this area and I'll create a sweet spot like a 382 to 618, and my general scalping plan on a 1 minute is when it comes back, and it always comes back, I'm going to buy it in the direction of the initial move. The other way to do it is let me clear this out. Come on, this screen's a little slow. Okay. The other way of doing that is price moves to the new news. It comes back, goes up, and hits hardcore resistance, going back like 2 days ago. Second level resistance, right? Of course, support if it's the other way. And I'll tend to look to revert to the mean, and I'll sell it off the top. Okay. And bring it back to the average daily range, so to speak. Okay. Now, if you guys want to know more, you know, see more scalping and stuff like that, just ask. I'm very helpful to do that for you. Alan, TradersWay.com offers you spot, Forex, and binaries on your MT4. There's nothing better. Okay. Buzz wants a whole session on scalping. I scalped like 3 weeks ago. If you go to youtube.com/c/tradersway, I did a session where I was just tired that day and I just didn't want to do any speeches. So I said, let's just open all use binaries. And I think I did 6 profitable trades in 45 minutes. Yeah, Bacon, that would be a good place. Okay. Just feel free to ask me. Just log in every day. We'll be here. Okay, remember, guys, TradersWay is investing into you up front. They want you to be a success. That's why I'm here every day. They're hoping to earn your loyalty. And that once you feel ready to trade real money, that you'll open an account at TradersWay.com. And you'll pay it back, and that you and TradersWay will be successful business partners for many years to come. They want to be your ECN. Okay? So peace on earth. May the pips be with you. May your profits be above average. Remember, this is a good trading day. They happen. It's not you. It just, the market giveth and the market can take away. So the 3-second rule applies. Does anybody know the 3-second rule? You know, I found a copy of my book laying around my office the other day. It's in there. Let me open up my books, Strategic and Tactical Forex Trading. Let's get the words here. I haven't done this in a while. The 3-second rule. I have to go to the index. Is it under numbers or letters? Yeah, okay. So under P. 3-second rule, page 126. Now, people have said this is the worst book ever written in the history of humanity. Just bear in mind that I accomplished that. the worst book ever written. All right, page 126 under Rules of Engagement. If you make a winning trade, you have 3 seconds to cheer, jump around your office, ring a bell, high-five your cat, and kiss your dog, while all the angels in heaven shed tears of joy at the beautiful trade you made. Your trading greatness is a shining light in a world of darkness. You are an inspiration to all traders around the world. When your 3 seconds are up, sit down, shut up, and get ready for the next trade. If you make a losing trade, you have 3 seconds to pound your fist, throw your mouse, kick your chair, drop your head in shame, and cry me a river. When your 3 seconds are up, sit down, shut up, and get ready for the next trade. Mini nomini sine, mini nomini sine, mini nomini sine. Right from the book of Forex trading. So anyways, the markets are good, you're making pips, it's not you, it's the market. But enjoy it. Sometimes they're good. Peace on earth, may the pips be with you, may your profits be above average.